Got a comment asking, how do you actually get an 8% return? Because you see all these videos about finance, investing. Yeah, you shouldn't just put your money under your mattress. You need to beat inflation. Inflation's at 3%. You need to invest it to get 8% return. Just invest it in the stock market. Invest it in real estate. But how exactly do you get an 8% return? I'm going to show you a very quick, simple way to do it. All right, there's this thing called the S&P 500. Surprisingly, a lot of people don't know what this is. If you watched one of my videos, what is the S&P 500?
Not quite sure, but it seems like it's some type of organization.
The public interview videos, I've asked a couple people what's the S&P 500. Some of them are saying like this is an organization or random things. No, it's the top performers. I don't need to write this down. In the US, the top 500 companies. Why do you want to invest in these? Because on average, this has gone up 8% in the long term. Not like 8% every single year guaranteed, but in the long run. So your investing horizon needs to be a decade plus. If you're looking to invest for 1 to 5 years short term, this is not for you. There's no guaranteed 8% return in a short time frame. This is more based on historical data over the long run of the history of the market. So when people say invest your money to get 8% return, they're talking about investing into the S&P 500. And I'm gonna give you exact tickers that track this, okay? So like an example is, this is probably the ring lights right here. Let me erase this and give you exact tickers. A ticker is what you buy a stock with. So like Coca-Cola's ticker is KO. So you go on any brokerage like Robinhood, Scottrade, whatever you use, you type in KO, you buy a share of Coca-Cola. So here's a ticker symbol for the S&P 500. All right, there's one called SPY, there's one called VOO. All right, these are just two examples. This is from Vanguard. There's a lot of other ones. You can just Google S&P 500 ticker symbols, index funds, and you can find them. But right here, these are ETFs, okay? The SPY VOO. If you just invest in those, over time, for the next 10 years plus, you should average that 8% return. Is it exciting? Is it fun? Is it like Bitcoin? Is it like crazy? No, it's not. It's super boring. You know, you might put your money in here and then next year it's down like, oh shoot, I'm down 10%, right? During like this past 2 years, I think in 2018, we saw it go up like 20% or so. All right, 2019 right now, it's been a very volatile year. It's been up and down, sideways. We don't know where it's going. But we know in the long run, you can expect that. In the short run, you don't know what to expect. If there was a guaranteed way to make 8% every single year, I'm sure everyone would be investing in that. But you know, there isn't. But there's definitely something to do if you have a gut, like you don't want to ever see this, which is definitely a possibility. You have to accept the fact that you might see this for 1 year. We are now in a crash, a negative 50%. All right, people saw this in 2008. You have to be ready for that. But if you still hold, you invest more, you dollar cost average, which means you buy more stocks during this time period, you'll come out on top and get your 8%. But I want to show you a portfolio that you can use where you don't have to ever see this. You won't make 8% over the long run. You'll probably make something like 6.5% or 7%. You won't make the full 8%. You'll make a little bit less, but you'll never see these drops. Or let me correct that. Historically, it's never seen a drop like this. I back tested this portfolio myself. It's from the billionaire hedge fund manager, Ray Dalio. I just want to map it out for you here real quick. I've already made a video on this, on what to do for a market crash, but I'm gonna map it out right here. So I'll break it down for you here really quickly, okay? So 40% of this portfolio is going to be in long-term bonds. Long-term bonds, okay? You can, at your brokerage, I'll give you exact tickers for these. So for long-term bonds, here's a ticker symbol that you can look up for long-term bonds, okay? 40% is right here. Now we got 30%. I should probably have written smaller. So let me make this a little more organized for you. 40% long-term bonds, right? VGLT. Ticker symbol VGLT. That's 40% of the portfolio, long-term bonds. 30% stocks. ticker symbol VOO. Okay? Or you could do VTI, the total stock market, if you don't want to just do the US. Next, we have intermediate bonds. Intermediate bonds, right? This is VGIT. Then we have 7.5% in gold and commodities. All right, gold will be IAU, commodities will be GSG. So here are the ticker symbols. Here are the exact allocations. So what, 40, 30, 70, 15, 85, 85 is 15, 100, boom, all right, 100%. This is the complete allocation. It's called the all-weather portfolio. Ray Dalio uses this, and this is to resist. Okay, I have a whole video on it. I'm not gonna explain it again, but I'll put up a video card somewhere here or maybe in the description below explaining exactly what this does for you. But essentially, when the market lost 50% in 08, this only lost, I think it went up 2%. 2008 crisis, when the market was down 37%, Ray Dalio's all-season portfolio was up 3.25%. Now, I back-tested this from... Watch that video. I explain exactly how it performs, and I actually back-test it for you. But this is a good allocation to have for those that have a weak gut. So that's it. I hope you liked this video. If you enjoyed it, drop a like. It's gonna help the algorithm, help this video get pushed out more on YouTube, help other people that wanna see this learn more. And if you enjoyed this video, subscribe with the notification bell, and I'll see you in the next one.